Welcome to a Now Explain Rough Cut video. This video is part of our manual bookkeeping series. You can find related videos on our YouTube channel or search the internet for a Now Explain Rough Cut. So now, let's get explaining. General Journal Daybook, what it is and why we need this daybook. Here we are inside an empty General Journal Daybook. It's a much smaller daybook. Here is an example of a General Journal Daybook. We don't need lots of analysis columns like the other daybooks. So what is a General Journal Daybook? The books of original entry, also known as the books of first entry or books of prime entry, record all the bookkeeping transactions for a business. They are usually updated daily, and so the term daybook is used. The General Journal Daybook is one of the books of original entry. It records general journals. General journals are those journals that are not recorded in any of the other books of original entry. Note, a daybook may also be called a journal, where a journal is a book used to keep a record of current transactions or an account of day-to-day events such as financial transactions. So this should not be confused with the term journal transaction. What is a journal? Every transaction is a journal. Each journal can then be classified and placed into a specialized journal daybook or a journal book. Sales transactions are placed in the sales daybook. Purchase transactions are placed in the purchases daybook. Cash, money in, money out transactions are placed in the cash daybook. All other types of transactions are then placed in the general journal daybook. What are the books of original entry? Depending on how a bookkeeper wishes to record the transactions of a business, there can be up to 8 daybooks used. While there are 4 main headings for the daybook, sales, purchases, cash and general, some of the headings can be further subdivided. The books of original entry are the sales daybook, which can be subdivided into sales invoice daybook and sales credit note daybook. Purchases daybook, which can be subdivided into the purchase invoice daybook, the purchase credit note daybook and the petty cash daybook. The cash daybook, which can be subdivided into the cash received money in daybook and the cash disbursements, the money out daybook. And then we have our general journal daybook, which is where everything else is recorded. Examples of general journal transactions: depreciation, wages, bank interest, accruals, prepayments, stock valuation and correcting journals. So none of these would appear in any of the other daybooks. Here is an example using stock or inventory, a stock journal recorded in the general journal. This is the value of the stock at the 31st of January. This journal will allow the gross profit for this business to be calculated. And there are 2 line items in this example. There can be more than 2, but the total debit value must agree to the total credit value. Now let's have a further look and analyze this general journal. This is the date the line item is to be processed, January 31st. This is the first line item, and there are 2 line items in this example. The same date will apply to all line items that form part of this journal. You can just write the date once, but it will apply to all of the journals. And then at the end, this text describes the overall purpose of the journal. So in this case, it's being stock valuation at the month of January. So each column that contains values must be totaled. By totaling each column, this allows us to see that the double entry was maintained for these journals. In this example, we are seeing that the total of the debits equals the total of the credits. And that's how you set up and use a General Journal Daybook. And why the General Journal Daybook is set up as shown using these columns: the date, the particulars, the general ledger account, the debit amount, the credit amount, and an overall narrative, the reason for the journal. For more information, go to nowexplain.com. Thank you for watching.